Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Henri from AkinovA. I was going to say good morning. It is just into the afternoon, but I'll say good morning anyway, because that's when we release. So good morning, Henri. How are you?
Good morning. I'm very well. Thank you for having me today, Alex.
Not at all. No, thank you very much for being a guest. Obviously you and I have spoken before, but for the people who are not aware what AkinovA do or what's the kind of purpose of the business, it'd be really great if you could do us a brief intro.
You bet, Matt. Thank you. AkinovA is a marketplace. It's neutral, it's digital. It's a global framework to transfer risk between capital markets and insurance. And everybody's welcomed on it. So we typically work on behalf of the insured and their broker to find them new capacity. But we're also creating with our partners new products to enable risk transfer to happen at scale between, the insurance space and the capital market space.
I was going to ask you about the term marketplace, and thank you for that. And you touched on it a little bit there, but I wonder if you might go a little bit deeper on how specifically you tackle that kind of marketplace. How does it work in practical terms? You know, creating new products. How does that work? And how does it work in practical sense?
So, look, a marketplace has to be an environment which has a social fabric. So, if you are a broker or the client of the broker, so the insured, and you look for capacity for a particular trade, you'll need to first create a teaser. We call that a trade opportunity deck. And the teaser is a way to prepare the deal room, which we also have, to be able to do that risk transfer. So teaser is a way to say, hey, I've got a risk. This is what it looks like, or a book of risk, or a binder, or whatever it might be. And to put it into a succinct way and translate it into words that whether you're an insurer, reinsurer, or a capital markets investor, you would understand what it means. So if you use some strange words like things which would be very clear in insurance, like reinstatements or premium, whatever it is, the goal is to translate it into terms that an investor would say, I know minimum I could lose that much, maximum I could make that much money. On average, I'd probably make about this much, and be able to have something that's attractive. So it's a very special risk or something that makes a difference to the broker and their client. It works the other way around as well. So if you are an investor and you look for a particular type of set of trades, and you have an appetite, I don't know, between 5 and 15% internal rate of return, whatever it might be, you can also say, hey, I've got capital to this amount to deploy against trade. What's out there? And the fabric of the marketplace is to make that as easy as possible electronically, but without forgetting the social fabric. So we have a chat, we have news, we have analytics, which allows people to think what's it's worth, also to be in a regulated way, to be able to have an audit trail of what was being said, and to understand, where are the contracts at and whether or not there is a further iteration before you can go and place it on marketplace to bind.
Thank you. That's I think the social element and how strong those social elements are underplayed a little bit. When we talk about marketplaces, I think we talk about kind of electronic trading of risk, and many respects we sort of take the people out of the equation in the conversation rather than kind of the practical sense. But in a practical sense, one would imagine that a large part of the success of getting a business like this off the ground is building relationships in real time, for you and the team. Is that a large part of the role of the business and the team, is actually kind of that education piece, that kind of networking piece in kind of an offline capacity as much as anything else?
I think it's critical. The best marketplaces are places where the stuff that is really just drudgery, the admin, the settlement, or whatever it might be, is being done automatically. but where you can supplement the human being's ability to say, hey, I like this or I don't like that trade, and to be able to give you a richer context within which to make those decisions, but not remove the person away. You know, when you design an algo and you do some algorithmic trading, it's still designed by someone. And that person tweaks the program the whole day long to optimize things, to, you know, whatever it might be. We're miles away from that in insurance on day-to-day risk. So even if we were there, there's still a human being making decisions somewhere. You could have a programmer, she's there bashing away on the computer, changing the algos. It's still a human being making a decision, right? So the best marketplaces, and you can see it, you know, electronic or otherwise, are where the interaction allows you to have as many interactions as possible, as quickly as possible, with as many market participants, but where ultimately there will be someone making a decision, and you've removed all the drudgery of all the other stuff that needs to be happening, like 15 email exchanges to have a contract. Nobody knows which version it is. And then you're there scratching your head. Your legal team's worked on version 2, everybody's on version 4, and then you burn time, etc. All of that stuff should be in the bin of history to enable human beings to make decisions. So, like, for instance, you and I could decide on the trade. Why? Because we have the information at our fingertips. Why? Because you can trace who said what, and you can understand the history of the, maybe the insured has a certain type of risk and it hasn't changed really that much. A lot of the work in insurance is to recast what was said before and retype it and retype it, which is nuts. I mean, it is crazy.
Yeah, we've talked before on this podcast about, usually in the context of talking about artificial intelligence and kind of removing of admin from that point of view, but just, you know, any innovation, I think when you look at it through a negative lens, is looking at kind of replacing people and replacing individuals or specific professions, and obviously I'm going to ask you about that in a second. But I think more than anything, from someone that, you know, my role is talent and people, and people don't move because people do move for money, but most of the time they move because they're unfulfilled. And there's a lot of unfulfilling jobs out there which are simply repeating work that's already been done, as you just said, you know, or that's an element of someone's role. So if we can remove those kind of bits of the puzzle or bits of business, then I think people have more rewarding jobs, and I think that leads to more creativity, and then that only is better for every industry, but particularly I think in the insurance industry.
Look, I think it's essential, right? So if you are there the whole day long doing something for the 5th time that you know has been done at least 20 times before you're in the same chain, and then you see 5 times the same email talking about things with slightly variance thing, and each time you have to rekey in, I mean, there's only so much boredom you can go with. And before you start to decide, I mean, look, I need to do something else here, right?
Yeah.
So, and to your point, so giving you a good marketplace gives you deal flow, so you can see lots of things. It gives you information at the time when you need it, not 5 months before or 5 months afterwards. And it allows you as a person to make decisions, and to then all the other stuff to make it more automated. That takes time to get there. And it does it in a way that's regulated, so people know what are the rules, you know, when you're going to buy or sell, and what are the service level agreements. And that's why we create our brand new regulatory framework. I mean, it's now, we received it at the end of January this year. So it's not quite new, but it's still very new. And if you have all these components, then you have vibrancy. And vibrancy means that people focus on making decisions as opposed to stuff.
Yes. Yeah. Stuff. Removing stuff. I was just as you were talking, all I was thinking about was the amount of times I have to write a proposal, and almost always I'm writing pretty much the same stuff. And obviously I've got forms for that. And, you know, realistically, the question is, do we want to do business together? Yes. Am I the person you want to go, in my world, to go and help you find an individual? Yes. but so often we spend, that's a very quick conversation, and then the kind of administrative element of it takes, such a stretch amount of time. And it's such an inherent problem in the way that we do business, because I think there's been lots of jobs created in that. So I think, talking about kind of obsolescence and moving roles towards it, there's an obvious risk with something like a marketplace. And when you're reducing friction between buyers and sellers, essentially, particularly for the broker, because the broker is that kind of that midpoint. It's a quite inflammatory comment, and I know the answer is going to be no to this. I suppose to expand this out, it's like, do marketplaces risk making the broker obsolete? And if they don't, what's the opportunity, and how can they best take advantage of the opportunity is probably a kinder way of saying the same question, I think.
Look, marketplaces which aim to cut the advisory in whatever form that comes are ill-advised, if I can put it like this, particularly if you deal in risk.
Mm-hmm.
So to your question about the broker, we set out from the word go, when we started and founded AkinovA, to be the broker's friend.
Mm-hmm.
So then the question is, for what and how, right? Otherwise you're there thinking, okay, well, so it's a nice statement, but all the broker community will say, yeah, but you still try and cut me out. So the point is that the broker is the risk advisors to the client.
Mm-hmm.
And I can't see that changing. Typically, you want to talk to someone to actually say, hey, what do you think of this thing, and how should I think of that? And so what does that mean in terms of the evolution of the broker? I mean, the broking industry in insurance has changed over decades in an immense way already, right? So brokers are moving in an environment where there are more analytics and more information available to them and their clients. Brokers are moving into an environment where they can offer different ways for the clients to think of their contingent capital stack,
Mm-hmm.
which insurance is. It's a capital that's available in the event something bad happens.
Mm-hmm.
And there are many different sources of that. I mean, you could have a banking facility, you could have an insurance contract, you could have your own captive, etc. And so for as long as the broker continues to be that source of advice to the risk managers, I can't see them going anywhere.
No.
Nor should they. So then the question is the other way around. It comes to us, which is, what can we do for the brokers, and what can we do for the clients, whether they are buy or seller risk, which adds value to what they do.
Mm-hmm.
Without taking them out of the equation. And we're back to the question that you had earlier, which is, what can we do as a marketplace to help the clients, the brokers, is to bring the data and analytics that they would need. Mm-hmm. So the buyer and the seller and the advisors can say, hey, this is one way of looking at what it's worth, but are there many other ways of doing that? Mm-hmm. Right? So if you're a buyer, seller, and the advisor, and you only, let's say you're placing a risk. So you have an insurer and the broker saying, hey, we think it's worth this. Well, the buyer of that will have their own view. It's called their own underwriter. They might have their own models. So that's two sources. But what if they could have a third source? Now, with a third source, you can start to have maybe a better price, maybe a different way. And I didn't say cheaper, but a better cover.
Yeah.
Right? Because you also need to think of what's in it for the underwriters and the capacity. If all they have is because they auction the whole day long, that eventually there's no profit to be had. Everybody's going to go. So it's about finding the right cover at the right price, mm-hmm. with the right advisory for the clients and the capacity providers, so the underwriter, to know exactly what they've subscribed to. Mm. And then discovering the price that is the right price. I didn't say cheap. I said the right price for that transaction.
Yeah. I think there's a tendency to sort of lazily sort of look at marketplaces and go that it's a drive towards zero, and I think that's not the case. It's just, for me, it's always been transparency of information, and the broker role. I think it got lost along the way. I think at some point it got a little bit lost that it was only about kind of being able to place risk and find provision for that risk. But actually, I think businesses like yours kind of really highlight that the value add to the insured or the carrier, depending on the insurance or reinsurance, will be the advice, the advisory part of being a broker. That's the value add, and that's where the role is important. And in many respects, it allows them to kind of focus on that and refocus on that, particularly when you're adding, like you say, it's a third source of information, it's additional data. And because we're seeing it now from a talent perspective, one thing that you can't avoid seeing is that the caliber of individuals and the sort of qualification of people going into risk advisory type roles is changing, and what those people look like is changing. Slowly but surely. So that's interesting. To pick up your point on price, though, and this sort of drive towards zero thing that I think people fear. Yeah, what effect do you think marketplaces will have on pricing in the long term? And or are we seeing it already?
I think, look, I think by the very nature of the industry and its connectivity to capital, because it needs capital, it's quite a capital intensive industry. It is already well wide into various sources of capital. Mm-hmm. I think for highly standardized risks, having a marketplace where, I mean, we see it, for instance, this year, the retro market is pretty tight, mm-hmm. which means that there's not enough capacity coming in. So having the right access to the right capital is going to be super important, and marketplaces can help. As a matter of fact, I would say the best marketplaces increase the size of the market. So it's just to take you, it's in the morning. So let's assume that we're around lunchtime.
Yeah.
And I always like to have the analogy of what's the business case for a marketplace. Well, let's think of it like a cake. So what's the business cake? Best marketplaces significantly increase the overall size of the market. Mm-hmm. If you look at even 10,000 years ago, when you had the first marketplaces of any significant, well, actually, probably even that, in small villages, in crossings where people were coming in and buying and selling goods, to discover prices means you can have a lot more of the commodity that's basically distributed. Now, what does that mean for insurance? It doesn't necessarily mean just finding more capital for the existing risks, mm-hmm. but it means for the insurance to discover new risks that it can underwrite and to discover the price for those too. And if you think about, one of the big battles for the industry over the last 30 to 40 years as a proportion of GDP, because it is largely focused on physical assets, so the tangible stuff, it has focused on that, fair enough. And it does write a few, D&O, PI, etc., a few intangible risks, but not really at scale. Contingent business interruption, cyber, it is trying to go in that space and discovering that it's a little bit more difficult. So a good marketplace, in my book, will allow us to be able to underwrite intangibles. And that's a massive new business cake to go after. Mm-hmm. So when you have that, then you have all the components, the underwriter, the insured, capital markets, the brokers, the actuaries, etc. There's a lot more to go after. And that's the way we should think of a good marketplace. It really grows the way you can go and address the clients and be able to do what societally insurance is there for, which is to provide contingent capital for a myriad of things in a way that is capable of deriving premiums so that the industry is also sustainable.
Mm. Yeah, no, I love that. I love analogy with food. I'm happy. Let's have a bigger cake. But no, absolutely, and I see that. I see it in my own world as well. There's kind of an increase in kind of marketplace type solutions, talent, and all I see that is that we've got a greater pool to pull on, and it allows me to operate on an international basis, which we haven't seen before. And I think to some extent, you kind of have answered a little bit of my question, but I wanted to ask you about kind of attitudes and kind of how welcomed you've been by the insurance community. Has it changed over time? Because obviously not the only marketplace type solution out there. There's obviously more kind of acceptance and understanding of these. Is there more kind of willingness to engage with these from the sort of incumbent industry now than there was sort of when you started the business?
The answer is yes.
Mm-hmm.
And it's not because of COVID-19. It's because the early doors, the early days of InsurTech was, right, I'll poke you in the eye, little guy and or little lady, and I'm going to take over the world, and off I go.
Yeah.
There's a lot more realization that to transform an industry of this scale, to grow it, and to make it work at scale, you have to work with the existing ecosystem, no debate.
Mm-hmm.
So when you start to think of the ecosystem and you think about, well, what does that mean? That means that you are able to unlock new things, back to the business case and the business cake, right? And so there is a desire from the large corporates and the large players, the large incumbents, to work with the newcomers. Now the question is for what, and the question therefore is how. For the newcomer, you need to realize that it's a regulated industry, so you can't do pretty much anything you want. You need to think about what regulation means, and how therefore you can help people within the framework of what's available, or create your own stuff, create your own regulations with the relevant regulators. Once you understand that, then the question is, what value can you really add? And there's a lot of iterations. So there was a debate just about 2-3 months after COVID-19, so the pandemic started, where right now we're a digital industry because we can do, we're working from home now. Okay, now we use, some video conferencing capabilities where it used to be a telephone before. That is not exactly have gone digital. Digital means you have the right flow with the right information, with the right eyeballs to make the decision at the right time, right? So people are moving in that direction. Now, there are different people who will look at, okay, is it going to help my bonus over the next 1 month? Is it going to help my bonus over the next quarter? Or is it something that I should do because in 3 years' time, I'm going to position myself? If you'd asked me 2-3 years ago, it would have been, how can you help me now? Now there's a healthy balance between, can you help me now? And I need to do this. And that's a big change. And it's to me, it's very exciting.
Yeah, that's fascinating. I think that's something I'm really cognizant of, because I've been quite, I don't want to say critical, because that's probably putting it too strongly, but I've always been aware of the kind of challenge for particularly listed companies, shareholder-owned companies or led companies, because if you're a leader of one of those businesses, it's very difficult for you to take a long-term decision which requires a huge amount of investment. Let's say you want to, really embrace insurance technology within your kind of large carrier or large broking house, because you're rewarded on the kind of a much shorter time frame. What's been the performance this year? What can the dividend be? So it's very difficult for you to kind of justify from a selfish perspective, and human beings, depending on the literature you like to embrace, but with a selfish organism. So it's you're always going to go after those interests. But we are also seeing enough noise, and I think insurance is an industry. I've worked across a few industries, but insurance is definitely an industry that moves together. Once it gets the momentum, it moves together, and it has to by its nature. And it seems there's enough sort of group momentum now that even the investors can't be unaware of it, and that's moving. Do you think insurance is quite unique in its kind of integration, and has that kind of got some kind of unique challenges with that? Because if you think about, I know subscription markets are only a part of it, but for example, just taking subscription markets, there's a unique level of kind of integration between competing businesses theoretically. Does that have some unique challenges to sort of making something like this work?
Look, I mean, it's the same in most industries when you have very large numbers.
Mhm.
It's called co-petition. I can't remember who said it, but you're going to cooperate on certain things, you're going to compete on some other things.
Mhm.
But the reality is, we're all attached to the hips,
Yeah.
right? So you have to compete. That's the right thing for business and the right thing for the clients. But you also know that the size of the investments and the size of the capital movement means that you're going to have to cooperate on certain things,
Mhm.
right? So, and there lies, I think, the attractiveness of where we are with insurance technology. The first wave of insurance technology actually happened even before Industry Tech 1.0 was coined, was starting to be some of the broker automation software platform,
Mhm.
some of the market automation platforms, Rebus in the past, exchanging, and a whole bunch of other, technology vendors and some of the big consulting firms as well.
Mhm.
Then InsurTech 1.0 came up, and largely it's been about onboarding clients better.
Yeah.
So the consumers, so B2C, better apps, better integration, better way of giving you a sense of, hey, this is exciting. You buy this thing, it's so easy. 2.0 has been to start to think about, well, how do we think of data and the analytics to power that? And some of the platform that's required to be doing a proper full stack, policy management, claims, and everything else. And where we are now is a play where really the big money is, which is all the back end
Mhm.
integration, that price discovery, all these various things, and the capital efficiency that's associated with it. So when you think about that progression, you start to see that we're addressing the bigger challenges. Of course, then the complication is now you're knee deep in regulations.
Mhm.
And of course, you're going to have to work with the big carriers and the big capital allocators and the big clients and everything else. And what's exciting there is that in 3, 4, 5, I mean, everybody will call about marketplace. Is it marketplace to have your policies listed for the existing incumbent? Is it a marketplace to do some secondary trade of insurance-linked securities? Is it anything in between? And we've taken the view that we have to be able to do insurance, reinsurance, and capital markets, insurance-linked securities, and be regulated to do that, where capital from 42 countries makes insurance risk. And then from that, then you have to build. So I think really if you look at the market and where it's going next, it's a place where yes, there's some competition, and yes, there will be some let's say transport layer of information that allows, whether it be your own proprietary brokerage portal or insurer or reinsurer portal, it allows all of those pieces of information to find the right environment to actually discover something that makes sense to the buyer and the seller of that risk and to the advisors. That's really what we're building. So it does take time, and you have to work with the various market participants. And there are a few tricks that you can have to accelerate that, of course. And of course, we're pushing that quite hard.
Mhm. Mhm. I suppose you've probably answered partially my question that I wanted to speak to you about, was about the kind of, do you think, I think the industry, I think all industries want kind of one solution. Obviously the insurtech business doesn't want one solution because there's few people vying for that spot, right? But I think the insurance market would almost like one solution provider for that kind of marketplace environment. But how do you see that panning out? Do you see there being specific markets, marketplaces for different things? Will there integration? Will there be this, co-petition? Or is there a possibility where there's a drift towards one kind of marketplace solution for which owns the kind of roads or the roadmap for multiple points in the industry?
Look, I don't think there will be only one marketplace. If you look at the nearest part of the financial industry, I mean, we're part of the financial industry, financial services industry. Um, you know, marketplaces and exchanges. So in the financial sector, there are a few of them. So I don't think it will be one for everything because you need competition. Now, then the question is, what integration can the various capital allocator and the buyers and the advisors what can they have as connectivity? And it's been somewhat amusing because I've been writing some software way back. So when I had hair at the time, and I was there thinking, right, let's do some connectivity in existing platforms. So you're talking about 80s and 90s here. And yeah, it was called APIs at the time, application programming interface. So, and now it's the big thing, right? Everybody wants to have an API for this, API for that. There are security issues associated with that, of course. But what you need to have, again, coming back to the good marketplace, a good marketplace, yes, it has environments within which you can find that deal flow with the information, which allows, human beings to make decisions. But it also needs to be connected. And if you have a good marketplace, so think, for instance, of some of the recent online auctions of various things, whether it be digital assets, whether it be some of the paintings recently or otherwise, right? So, yes, there's an auction environment, but there are telephones, there are apps, and the apps themselves are connected to other apps. And it's coming back to that ecosystem. So I think the best marketplace will be not just the one venue where you turn up and you have a prize, but it's highly networked to other environments which allow to do the prize discovery, allows to do the broker advice to their clients, but allows also the capital markets cap raiser to their client to actually say which trade they should allocate capital to, or which insurance or reinsurance, and have that sense of community and ecosystem. A marketplace where you just turn up and you just have one place where you're going to auction your goods in a physical sense, that's kind of very 20th century and before.
Yeah.
Right. So I think the ability to connect securely in what is known in the industry in a trustless way. So you assume that it's not trustworthy, and you have the right security environment to be able to make sure that if anyone is tampering with anything, you'll know, and be able to network that to then deliver these three functionalities that I talked about earlier: deal flow, information, making decisions. Then you've got it. That takes time because then the tech is more complicated. There's a hell of a lot more, security. Yes, you used to distribute, what people were very excited about 3 years ago, distributed ledger, but for a very different reason, right? And so you have integration there, and then you can do the price discovery, but it's far more distributed. And the tech enables us to do that. And that's the great new thing about it.
It's interesting, isn't it? Because it's like we sort of, the more we digitize it, the more I hear you explain it, the more kind of personable it really is. It is about cooperation and it creating that, coming back to how you started this podcast, creating a kind of a social dynamic. It's much more social than we kind of give it credit for. Something I meant to ask you earlier, and I apologize because I'm sort of slightly kind of backtracking a little bit. I wanted to talk about new capital coming to the market. One of the sort of things I was thinking about as we were talking about your cake analogy, making a bigger cake. So we've seen a lot of kind of things in the financial markets where we've created kind of more investors because we've made it more accessible. Just taking things like cryptocurrency, so Coinbase, it's very easy, or Robinhood in the US, you can obviously use that as a sort of personal investor. Some of the negative elements of that have been the kind of, you've got unsophisticated investors and obviously in quite dramatically losing their money. Now, obviously, we're talking about sophisticated investors, but they're not necessarily kind of cognizant of the kind of reinsurance, insurance market you might be working on. How do you kind of go about educating new investors in the insurance sector? Is that a role that you consider yourselves to play, or are you simply providing the kind of platform for them to do that if they kind of want to come and play in that space?
Look, I think it's important to give, for marketplaces, to give platforms, a platform for those who are able to educate, to therefore educate the investment community. In a way, actually, it's very good, because if you're able to explain what you do and the type of risk that you take on to people who are not in your industry, you're probably really good at doing what you do. Yeah. So it's a bit like, if you can explain to I wouldn't say child, but let's assume that were the case, what you do, and you can explain it in a succinct way where they can think about and ask with the right questions, then you are probably quite good at what you do. So I think the role of a marketplace is to enable that ecosystem again, to have that discourse as to what's its worth, how does it work. So you will start to see more webinar from us. We've already done in a more private way what we call the Ask the Expert events, where we organize a private dinner. It's been virtual for the last maybe 2 years now, where we talk about one particular topic. And we have non-competing people on the same as the expert event to tease out what are some of the core issues. And in particular, it's 1 hour, so we're not going to solve a lot of things in 1 hour. But what's the one takeaway that we have that we could all do? I think there is now more of a requirement to be able to explain risk in a different way. So if you think about the 4 areas where we're active, climate variability, and natural catastrophe is one. The second one, mortgage insurance. The third one, credit insurance. And the fourth one being intangibles in general, which has, of course, cyber, contingent business interruption, etc. in there. So they're kind of our 4 pillars. We don't call them lines of business because they're a bit broader than that. If you think about all of those, they need either more diversification of capital. So that could be mortgage, for instance. They need more information to be able to take the right information on credit. So you look at supply chains around the world now, and the way risks are moving through the supply chain globally is just immense. So more information. If you think about intangibles, you just need to have the right data. And there are loads of data out there, but they're not organized in a way that makes sense to the right individual yet for the right capital to come in. And if you look at natural catastrophe, I mean, if you think about a more resilient world, when a lot of the big insurers and reinsurers are trying to limit their exposure on their cat books, which I understand, right? Then you need to have a much broader approach to be able to bring the right capital for those insurers and reinsurers to be able to underwrite the risk. And that's how insurance-linked securities started in the 90s. Now, if you ask any insurer or reinsurer, they're going to tell you I need it. Now, the question is, what does that do to pricing, and what type of risk are you therefore able to underwrite? And if you look at historically, when insurance has continued to grow its footprint and its profitability, it's when it's gone out to underwrite new risks. And if you look over the last 15 to 20 years, it's largely been able to underwrite the existing risks. And guess what? Then competition goes in, efficiency goes in, and you forget that business is not just about doing things right, but it's also about doing the right things. So it's efficiency versus effectiveness. And effectiveness say, hey, there's a brand new risk that I can underwrite profitably over there, and I've got the data. And the major challenge is that all these risks are becoming far more dynamic than they've ever been. And that's why we created AkinovA as an electronic venue between capital markets and insurance that's regulated, digital, all of that, is because you then need to be able to be far more responsive. And doing 15 emails with 25 meetings and 52 contract turns can be done faster and better.
Yeah, I love what you said there, because the sort of conclusion on that is particularly talking about the headline title of the podcast, which is leadership and really we focus on innovation, is that really the conclusion you lead is that innovation is an essential part of business. Because if you're only dealing with BAU, then you are constantly looking at new efficiencies, and then efficiencies essentially leads to kind of pricing having to go down because you'll get new entrants, it'll become more efficient, it will drop profitability. So unless you're looking at new areas and new markets, you're not growing. And so I love the conclusion being that it's an essential part of business, which I agree with. I'm really conscious of time, so I've always got to selfishly throw things in around teams and talent and building teams, because that's my reason for being. And you've got a really impressive team at AkinovA. Got some really particularly high-profile advisors. I wanted to ask you a two-part question, which is how did the team come together? Because I'm always intrigued about how much was own network. Did you use some external kind of headhunting businesses? You know, how did you engage with that? And how important was building that sort of team, particularly to this kind of marketplace type solution? You know, does it because I would see it as essential to getting that adoption you need.
Look, all of the above. So you know, I'm going to use more network and people that I know who know other people for sure.
Of course.
But that only goes so far, right? So the other thing that I would say to anybody who's doing anything, never mind it's marketplace or otherwise, start from what do you think are the portfolio of competencies you need to help you steer your organization, your business, whatever it might be, to get to the end goal. So you need to have what's the end point that you're trying to achieve. And for us, it was we need to have some strong technology input. We're a technology business. We need to understand the space in capital markets and insurance. So, and they are all in the same industry and financial services, and yet they speak very different business dictionaries. And they also have different regulation frameworks. They all talk about the same thing. How likely is something bad going to happen? So you could lose your loan if you are in the banking industry. Never mind having the principal basically. Never mind having the interest back. In insurance, is how likely is this risk going to crystallize? But then the other one is the credit risk. Am I going to get paid? Right. So in essence, it's same business dictionary but different part of the industry. So we needed tech, we needed insurance, we needed capital markets, and we need expertise in growth. And so you start from, think of it like a purse or wallet where you have a set of banknotes or a set of tickets to your destination. And then you work right to left. Right to left planning is highly underrated. It doesn't mean that it always works, but you know, right to left. You say, by that year, that's what I want to do. Okay. Then you go back and you say, you network a lot. I would always encourage anybody in business, but particularly if you're building a business, network a lot. Go to a lot of events, have lots of conversations like this, which can connect you to other people. Understand what makes other people tick. And then if you have an opportunity, create yourself a little advisory board. The advisory board might cost you a little bit on equity or whatever it might be. It will cost you a bit of time, so opportunity cost. But it's a way to really to test out with people, do you like them? Do they like you? How do they work? And then it can lead to you having the right people on the board or otherwise. But what it allows you to do is to really have people that you can call or who can call you for genuinely things to happen. So here's the thing. If you are a growing business, you can only entertain so many what I would call coffee and biscuits conversations. So you feel slightly warm, slightly wet, but nothing happens. What you do want to get, Alex, is if I had the call with that person, whether they're on my advisory board or not, would they be able to help me because I add value to them, but they can connect me to the right person to make the right outcome? And if you are outcome oriented, then you can start to think about who you want on your team, because now you'll have the portfolio of competencies, what I was talking about, the type of skill set you want to get. You'll see those who are action oriented and in particular outcome oriented. Now you've got your team. And so how did it work? At the start, I had two friends, one who is in the growth area, and the other one is capital markets, but insurance, through another friend. And they became the first advisory board members. And then from there, we started to construct, talk to other people, and then we are where we are today. And for a marketplace, I can tell you, you need that and some more.
Yeah. Jill, that's brilliant advice. And I think particularly the networking piece as well, I think it's massively underplayed. And there's a podcast that's gone out today, which was a venture capital contact of mine, his good friend Adam at NFP. And we talked about, he's almost adopted a new line of questioning when he looks at the investments, because it's talking about how are you going to put your team together. We talk a lot about the gaps in your business, and like you say, who do you need to get to the point that you want to be at? And that's talked about in the investor deck. But quite often what's not talked about is how you're going to get that team together. And we all know good people and we want to bring them in. But it's like, where are the additional gaps and how do you get them? And he asked me, and I just went network. I mean, it's all it is. Obviously, the benefit of someone like myself is just that my job is 99% of the time networking. So you can outsource that networking, but you've got to do it. So you're paying someone to do it on your behalf, or you're doing it yourself. But I think if you can network and then you make that personal connection, yeah, it's really super valuable. But look, Henri, thank you so much. I won't overdo our time, and we don't want to overrun, because we don't want to eat into sort of too much podcast additional time. I think 45 minutes is the magic bullet time that the data tells us. But look, I did want to ask you what's next for 2022. Is there any kind of sort of significant updates or integrations or anything that's coming up on the horizon that we should be aware of and look out for?
So quite a significant team growth. So we already have addition in the technology team, the commercial team. The year ahead, lots of exciting new things. And the thing that I'll finish with, we'll finally come out with our first product to be able to start to get to underwrite intangibles. And we are super excited about that. More about that in 2022.
Awesome, brilliant. Well, that's a lovely way to end it. Henri, thank you so much for your time. Really appreciate you doing this. And yeah, thanks for being a great guest.
Thank you very much, Alex. Appreciate it.
Cheers.